Hey, my name is Ruslan. One of the co-founders of Float. My background by education is computer science. Started the business back in 2020 with my co-founders, pretty much out of school. Had this crazy idea of helping businesses manage their credit cards better, and have been at it for the last few years. Have grown and scaled the business quite a bit. We now do almost everything for businesses when it comes to finances, from banking to corporate cards to expense management and so on and so on. And it's been a fun journey of building and scaling a startup in Canada and building for finance teams in Canada as well, who are really, really underserved, and something we're very, very passionate about. We started with cards and, largely thought that our first product market fit was a Canadian startup looking for a corporate card, because getting it from a bank, even to date, takes probably like 6 weeks. And I think the existing players have created this infrastructure for themselves where they, protect themselves and protect their businesses by creating all this regulation and putting it in place. I think Float is riding this, huge tailwind that like people hate their banks. Like there's like a genuine personal hate towards banks. So the thing we started, measuring is how much hard dollars are people saving when they switch to Float. And that's where the some number came, where we literally surveyed something like 200 or 300 or 400 customers that switched to Float, and their finance teams told us that they save about 7%.
That's crazy.
Which is way better than whatever cashback you're going to ever get from a card, because cashback is obviously capped by like the payments network economics and whatnot. So
right.
Founded in 2017, StartWell is Toronto's independent hub for innovators to collaborate. Our podcasts relate perspectives from the world's most diverse urban population to reflect unique insights into global business, media, and culture.
I think we've had you in different rooms here at StartWell, but not in this one yet.
I've been in all the rooms here pretty much at this point. Yeah.
Awesome. I wanted to hear a couple of things today. Okay. We'll dig into the founding story that you just kind of gave us the overview of, because I think is interesting. Also jumping into the big why. I find it fascinating because that's a lot of people don't tackle things that, feel like big problems because it's kind of tough.
Yeah.
So let's start there, and then we'll go off into kind of this integrated, services side, or whatever you want to call it, the operating system for CFOs or whatever you're building. But let's start at the beginning of this company and say, why did you choose this problem?
Yeah, it's a great question. So, so as I mentioned, we started with my co-founder pretty much out of school in 2020.
Co-founder is Rob.
So co-founder Griffin originally, and then we had Rob join us basically a year into initial build out of the product and sort of getting started. And he joined us at a great time because we basically had our MVP somewhat ready to go.
Nice.
Spun up card issuing, negotiated our visas with banks, and our partnership with banks, visas, and so on and so on.
Yeah.
Had basically the whole platform, at least the core of it, built out. And then had Rob join pretty much as I remember we hired our first AE. I was just onboarding them back then, still doing sales myself. And then Rob joined us as pretty much like a employee number 3 effectively, right?
Crazy.
So he's been with us ever since. And the why I think is definitely really interesting. Mike, Griffin and I we first started working on something. That was our step one. We knew we wanted to
to work together.
Exactly, together. So we started a bunch of stuff. I remember back in year 3 of school. Then we thought of things in year 4. And then, the thing we kind of kept coming back to is that we want to build an impactful business. We want to create something that's going to be really valuable for people. And we had the skills because we're sort of engineers by education. By year 4 of UW CS program, you can do a lot. You can build real products.
This is Waterloo for our people not in the region, right? UW is Waterloo?
UW, exactly.
Okay. Waterloo is, and set that up, Waterloo is basically the best engineering school in Canada?
I think they're the best
for
applied engineering.
Okay.
Because I think UFT is great for research still, and it's still better at research. If you look at I think somebody posted this recently on Twitter, with comparison of how many achievements UW achieved versus UFT achieved. UFT is still ahead in terms of research, but UW has built an amazing co-op program. They train you how to actually build products.
Right.
And I think UFT, transparently. I don't think it's close on that dimension. So we were very hungry to build a product. We felt like we had the skills to do that. And I think both my parents and actually his parents too, they've both been like business owners themselves too, right? So
what did your parents do?
So my parents, my mom had a series of clinics back at home in Russia.
Okay.
I think she scaled it up to like 10 clinics at some point.
She's a doctor?
She's a doctor. She's built that business. Her, co-founder also like doctor herself too. And they started from nothing. I remember like I don't know, I was probably 6-7 years old. They were themselves installing lights in their first clinic.
Sounds like me, man.
And like she didn't know what she was doing, but like she slowly figured it out, and they've scaled it quite a bit. And then I think Griffin had his also parents, start businesses, or at least like I know his dad runs a B&B and stuff like that. So
okay,
definitely have experience with that stuff. And yeah, we didn't even expect that we're going to end up building this product, to be honest. In the beginning, we started working on some really cool computer vision stuff back in the day. I was really into like machine learning and artificial intelligence and things like that. So we started building just like cool things together, I would say first. But as we started looking for that like real pain point that we knew ourselves from like a real world, we kind of ran into this thing that we've experienced firsthand ourselves, which was like filing expense report. And like, I remember this really painfully myself because I had to relocate for almost every one of those co-op jobs I had, basically. So I had to move to Guelph for my first one, had to move to Ottawa to work with Shopify for my second one. Then for the third one, I had to move to Pittsburgh for it was Uber's self-driving team there.
Okay.
So I was a computer vision engineer on that team. And basically I had to move there, relocate. I was like one of the first interns they hired from Canada. They couldn't really pay me back to my Canadian account. I didn't have a US account.
They just gave you Uber credit,
Well, they did do that as a perk, but not as an actual like reimbursement for like rent and all the other stuff that you pay out of pocket.
Sure.
So you're spending like thousands of dollars as a student on a personal credit card. And like, I didn't have that money, and they said they would reimburse you, but I later found out that they couldn't because like paying back to Canada, they can't do it. I'm still on my international student visa in Canada. Getting a US bank account is so painful because I don't have a PR card yet, right? Like all that stuff.
Yeah.
So anyways, it's just like this idea of having to pay out of pocket for business expenses and then going through the process yourself first, but then also just like trying to get that money back, even though you didn't do anything like wrong necessarily. Or trying to get this money back into your bank account is like really painful. So the thing we kept asking ourselves is, it's like, why do I have to pay for this first? Why can't the company pay for this on my behalf, basically? It's interesting because we were pretty naive about this problem probably when we started.
Yeah, because you weren't like,
not finance professionals
or like, career track employees of an enterprise business.
Right.
Lost in like cubicle nothingness.
Yeah. So we didn't know much about it. So we kind of just went to talk to a ton of finance people and just asked them, why hasn't this been fixed? Why nobody is working on this? Have you guys seen the solution here? Like, what are the tools you're using today to deal with this stuff? And I think every single person we talked to, we kind of heard like two things consistently. One is, we would use something if it existed. And two is, nobody's building anything for us. And specifically what we heard is that nobody's building anything for us in Canada.
Okay.
Because the needs in Canada were quite unique. And the, regulatory requirements to issue a card, get a bank account, transfer money, all that stuff is different country by country. Taxes are different country by country. Accounting integrations, like other tools that need to connect to your tool in Canada are different also country by country. Anyways, localization is basically quite important for our industry and our category. And nobody was building for Canadian businesses and teams. And that's why we kind of saw the opportunity. And then, back to the why, to fully come back to the why, we thought this was like a massive opportunity. We kind of looked at it and we went like, why isn't anybody doing this? And it felt so obvious, right? Like every single business needs a credit card, right? Every single business needs to pay a bill, have a bank account. and like literally nobody was building for Canada, especially when we were getting started. So that's kind of the why for us. We got really interested and passionate about the topic. We felt like nobody was building this. We had that personal pain point from like the employee point of view, but when we heard the finance story, we kind of went like, this feels really unfair.
Mm-hmm.
And then when we actually got to incorporate ourselves and sort of start to apply for our own credit card, do our own bookkeeping, we just kind of realized that like, this is the stuff that slows you down as a business owner. Like, you want to go build a business. For us, we wanted to go write code.
Right.
But we had to spend so much time dealing with banks, so much time dealing with expense reports or bookkeeping and all this other sort of like
financial back office for entrepreneurs
you don't want to touch
and
that
new
stuff.
Ventures, especially.
Yeah.
I mean, like I think people grow to a certain size as their company to put someone on that stuff and then build out a team just to deal with that stuff.
Totally.
And they're like, wait, that's a very expensive problem. Just putting staff on this issue.
Yeah, exactly.
Man. Yeah. So as you dug into it, it was a bigger problem than you had realized, but also maybe what did you think about market scope? And like, at what point did you say, okay, we're tackling Canada, and is that a boon or is that a problem?
Yeah. We always thought that you have to tackle Canada. Like, you cannot tackle many countries at the same time. Maybe you could, but then your value prop just becomes very different, right? Like, to solve the problem for Canadian businesses, we felt like you had to have the localization, the breadth, the depth, like all of those things. And you can't really do it without like being very focused, frankly. And I think it's everything, right? Like the brand, the messaging, how you talk to customers, like all those things matter.
Yeah.
And I think Canadians also, when they're forced, they will buy global or like international solutions. But if they have a choice to not do that, they will always choose Canadian, frankly. And I think, buying Canadian is something that's even now is getting and becoming even more popular, right?
Politically in the last little while.
Yeah, but like the other thing we kind of saw is because Canada is sort of this market number 4 or like 4 to 7 on everybody's roadmap, right? It's never number 1. Your Canadian experience becomes so much worse. Even if you're signing up for this seemingly amazing product in another country, by the time it comes to Canada, it just becomes so much worse. So that's what we wanted to avoid. We wanted to build like at the global standard, the best possible product for Canada.
Okay.
And nobody was doing that. And I think today, I don't see a lot of people doing that as well.
Yeah, it's true, because there's so many like social, cultural issues to do with that. I think a lot of in technology, and if people self-subscribe to being technologists when they're building companies, building technological solutions, they're going to focus on like, let's say what investors might look for outcomes in, which is scale, and scale doesn't necessarily get satisfied by 40 million people spread across this massive country.
Totally. And like, I think, when you think like, it's hard to put a float as a product or a business into a bucket, because it's not really just SaaS, right? Because if you're just SaaS, you really don't have those localization issues. Usually you just go global, and that's your best TAM opportunity, right? Vice versa, float is not just financial services either, because just financial services, you can approach it differently, and all those things. It's kind of a mix of both. So it's hard to put a specific like bucket around it necessarily. But yeah, it very clearly to us meant we have to focus on Canada. We have to build the best product here possible. And like, there's a massive market here to service businesses, and nobody's doing it.
Right. Okay. So at what point was it real? You started, I mean, it was real since the beginning, but you guys start building these solutions, trying to figure out what people need.
Yeah.
Obviously this problem requires not just grit, but the ability to like articulate your own value to partners and talk to the banks to work with them or whoever else.
Yeah.
So at what point did it get real that like, okay, we got to do this is going to be tough. Did it ever feel like it was going to be tough?
There's been a lot of moments. I think we raised money quite early in our journey. Okay. I think raising money for the first time, as founders who haven't done that before, was definitely like, was a challenge to overcome by itself. I think the first like real moment was working with, the big banks, Visas of the world on compliance, and actually navigating all the requirements they have for you as a fintech to basically start building a product and scaling it, right? So you can't bootstrap this business. You cannot bootstrap a product like this. And we realized that quite early in our journey, but that was a tough realization, because We're software engineers called by education. And now we have to navigate this whole other world of what needs to happen just so that we get to build the software, right? So that's always been interesting. We definitely learned a lot through that journey, had to rely a lot on like experts in the industry and so on to help us navigate that. But it's part of it's the cost of playing the game in this industry and this category.
Would you say that at that point you started finding champions that kept you pushed along? Like
everywhere along the way. I think, there's definitely something like magical happening in the Canadian venture ecosystem in 2020.
Okay.
Where capital was free, right? But it was obviously...
Oh, I got stickers from my daughter on my sleeve. It's from breakfast time. Okay, sorry, continue. Magic. You were talking about the magic.
It was a magical time, right? Like you could raise money very easily from, a slide deck and just having a background of being able to build products, right? You could raise a pre-seed really quickly and just get to actually focus on building the product because you have the capital in your bank account now. A ton of support all around. I think that was probably still all-time best Canadian venture capital market that
2020
will exist for a long time. So a lot of people support us along the way, people we didn't expect would support us, frankly. Like some of the people we reached out at first to be our customers later ended up being like, hey, I think what you're building is really cool. Can I just become your like product advisor?
Nice.
Or can I do your books? Because I just want to see like, how can I stay along in your journey, right? So there's a ton of stuff like that.
Can you get me that person's number? I need someone to do my books.
Actually could. I don't know if they're still doing it, but it's been amazing to see that. And we never thought we're going to get this amount of support in the early days. We thought we were just kind of like hacking on something on the side.
Right.
But yeah, it's been great. Like everywhere along the way, like I think Waterloo generally creates this amazing atmosphere around you as a startup.
Right.
That like everybody wants to help you. And that local community is really strong. But then, as we moved out to Toronto as well, as we started meeting our customers, they just wanted this product so much to exist that I think they really helped us as much as they can along the way. Yeah.
So what was the initial version of it's hard to stage these things because you're continually improving the product, right? But like first version out to market, what was its core function? What were people buying it for?
Very simple. It was pretty much click a button, get a card. That's what we called it. It was effectively spin up a virtual card for a team event, an offsite, a specific purchase you're making that's large maybe, and you want to put it on a separate card.
Powered by Visa.
Powered by Visa, powered by banking partners behind the scenes.
Yeah.
So the full like click to create a card, swipe, checkout, all that stuff is working. You get your transactions coming through. It syncs to your accounting system.
Yeah.
But it's like a single user journey, right? When you think about how businesses spend, there's like 1,000 ways how to spend.
Oh, totally.
So that's really what I think the last few years have been around for us, where it's actually building out all this other stuff outside of just, create a card, punch in the card number into your checkout site, and then see the transactions come through, right? So yeah.
Okay. So then how does it expand from there?
We started with cards and, largely thought that our first product market fit was a Canadian startup looking for a corporate card, because getting it from a bank, even to date, takes probably like 6 weeks, right?
Oh, it's a pain in the butt.
They underwrite you personally, which is really painful. The limits you get are pretty bad. I remember when Griffin and I applied for a credit card, we got a limit of like $2,500 from them. Even though we had
you have to keep topping it up halfway through a transaction.
Yeah. And we had our entire like pre-seed sitting in that same RBC account. But the issue is that they see you as an individual because your business is not mature enough yet.
Right.
So that's why startups uniquely have it really bad in Canada. So they underwrite you personally. And if you personally are a student, for example, out of school, you will not get a high limit. Or maybe if you don't want to, I don't know, that personal underwriting, you're just not going to get a high limit at all. So that was our first, call it product market fit moment. Get that first corporate card, move your spend to float as an early stage startup. Then we went quite deep into software. What we really realized is if you're serving finance teams, not just the founders, you actually need a lot of workflows around that card. Like if you think about consumer spending, you kind of like swipe that card and you forget about it, right? Like you might review your bank statement once a month, but
right, but you're not analyzing your spend and grouping it for taxes and doing all this stuff.
yeah, like it's like swipe and forget, right? Vice versa with business, you swipe that card. Actually, majority of the work comes after the fact. It's about categorizing transaction. It's about approving that expense, attaching receipt, making sure that if CRA ever asks about it, like you have all the evidence, all the documents provided,
right,
reconciling against your bank withdrawal and all that stuff, right? So you multiply that by, a couple hundred transactions a month. That's a lot of work. It takes, time from finance teams to do this stuff. And that's what we end up building up basically next, right? So we build the whole functionality around, well, once you swipe a card, if a transaction is over $25, automatically request a receipt from the spender, right? Or, creating an approval chain before a card gets issued, so that based on your sort of team configuration or who is the reporting manager of who, different people get to approve that expense.
Yeah, within the
based on the
platform.
amount, all within the platform, like over Slack, which is crazy. Like you never think you could create a bank credit card by approving it in Slack, but
it's good. It's like socializing the payment. So Judy's like, Bill, I need to pay this vendor today, otherwise, blah blah blah. We're gonna lose the opportunity. Yeah, no problem. Here, I'm on holiday, but I got Slack access, so go for it.
Exactly.
And then the card is active, automatically issued to her the credentials to punch in. Boom.
Exactly. Go check out. And like even that experience alone, like it's been 3 years since we launched that, call it. To date, I still think that's magical for most of the business in Canada, because
virtual cards are magical, and the data around it and being able to this is a large topic, but like the idea of making data usable is huge. Like everyone knows they have data, but what does that mean if it's not actionable or useful?
Can do much with it.
Yeah. And then you look at the cost of the alternative, right? I'm sure, I don't know, has your marketing ever done this? Like done the kind of like alternative comparison cost to an average user to show people like how
Offload?
Yeah, in terms of like just admin costs of like payment processing and like managing the payments and booking the payments and all this stuff.
So we've done this, and what we found is, so there's a couple numbers that we found that we felt very good about is, so our customers close books about 8 times faster because that data is usable, right? Like it's back to that point of, you do get that data from your bank statement, but it's like PDF
parse it. Yeah.
And it's missing key like metadata that actually helps you make decisions about how to categorize that transaction, who spent that money. You never know, right? In Float, you can like pre-categorize a card to a certain GL code before the spend even happens, right? So you never guess where the money went, kind of thing. So 8x faster times to close the books, which is really powerful. And then the other one we saw, which is like hard dollars, it's about 7% that customers save by switching to Float.
How do they save 7%?
So it's really interesting because, since the day we started, because we're in this credit card category, everybody thinks about cashback all the time, right? It's basically like,
I wonder why. But anyway, we'll dig into that.
Yeah. So tell me how far you want me to go into that stuff.
Cashback is a weird thing. Let's go far into that. I mean, I don't know. What's your take? Let's break it down for the people that are listening that might not have cashback as an option for a credit card. This is something that's been sexy in like credit card promotions in for new signups in Canada for a while. It used to be about like points.
Yeah.
And now it's really about like, so people don't want to
Cashback.
Yeah, they want cashback.
I mean, it's all just marketing, right? Like that's really what it comes down to. Like when you think about how can your business actually save money, or how can you even as individuals save money, right?
But that just means okay, like net, this just means that the transaction fee is lowered. Because,
sure.
Right?
It's basically like out of $100 you spend, you get back, let's say 1%, so that $1, right?
Yeah.
But the thing that people I don't think realize, and like I have this argument with my fiance actually all the time, which is like so funny. So cashback is so popularized and it's marketed so aggressively, but like you can spend $10,000 and you're gonna save, well, you're gonna get back like what, like $100 basically, right?
Right.
So what if you just didn't spend those $100 in the first place? Or what if you identified like a charge that was duplicate that would save you way more than $100. Let's say identify a subscription that you're getting billed for 12 months in a row
Right.
that you shouldn't be paying for.
Right.
So when we looked at that for businesses, we kind of saw this at such a more dramatic way versus like on the consumer side. You might be able to track of your own stuff. But when you think about a business where there's like 100 employees, you have no idea who is using those, SaaS licenses across your team. You have no idea who is making those purchases. And if this is something that can be canceled by now and nobody's using it anymore, or
renegotiate,
exactly.
Yeah.
So the thing we started, measuring is how much hard dollars are people saving when they switch to float. And that's where the 7% number came, where we literally surveyed something like 200 or 300 or 400 customers that switched to float, and their finance teams told us that they save about 7%.
That's crazy.
Which is way better than whatever cashback you're going to ever get from a card, because cashback is obviously capped by like the payments network economics and whatnot. So
right. Yeah, that's huge. No, I mean, it makes sense that, like, again, it's about the power of data, right? To save money.
Yeah.
That's crazy. Okay, so it starts with this. You start building a little bit more of this, like, eyesight on where the spend is happening and automation around it.
Yep.
So I'm sure you can like tag certain types of spends for virtual cards to not let them go through. Like,
yep.
None of my staff can go to the spa except on Tuesdays.
Sure, you could do that. Yeah. Very specific policy, but yeah.
You're only relax on Tuesdays. And then where does it go from there?
Yeah, it's a great question. Like, I think, there's, first of all, I'll say that like the whole suite of like finance team and CFOs, like obviously we talk about cards a lot, but like everything needs some version of like rebuilding, especially in Canada again, because nobody localized it for Canada. Nobody's building for Canada only, and nobody's actually focusing on the problems of customers here.
Right.
So, the same way we did the stuff with cards, we later launched reimbursements, and we kind of saw the exact same thing. Nobody does Canadian payouts. Once you submit a reimbursement request, guess what? Your finance team goes into payroll tool, adds manually, most likely, or so through some kind of like CSV import,
right,
what you need to be paid out later. And then like, this takes time. Like this is where your business spends time, basically. And then we did that same thing for reimbursements where, you automate everything, you streamline everything, put it all in the same place. The same place aspect is also really powerful, because back to your point of like data, you're not looking for like 3-4 different tools for maybe similar insights, right? Like, you can look at one place and see, your total spend across both reimbursements and cards, for example, which is really powerful. And then I think, from there, we kept expanding. So we went into bill payments, right? So exactly the same problem. Paying bills in Canada is terrible. I don't know if you know this, but if you're a SMB customer with like a major bank in Canada, you still have to go to a branch to send a wire.
Yeah.
Which is like insane.
Unless you have a personal business manager who can like do it for you. Which most people don't even know you can get one.
You can get it once, I think you have something like more than 500K of cash with the bank directly. Or like
when they say that on air, I don't have that, and somehow I have a business advisor.
When they deem you important enough, but most people don't get it.
Yeah,
and then you end up having to go to a branch to send a wire, which is crazy. Like, what age are we living in?
Yeah, so slow.
So I had the stats prepared in advance, but like 50% of business payments in Canada, approximately, are still basically like check and cash, so non-digital payments.
That's epic. And if you look at the amount of check fraud in this country right now,
huge.
It's ridiculous.
Because think about what has to happen with a check. Like, somebody has to literally cut you a check, put it in an envelope, send it over mail for it to arrive to the recipient's office, basically, and then they have to cash it in, and then you obviously have to have enough money on both sides. Like,
it's a nightmare. And like experience. And I think this is a weird one, but like the OCR, the promise of OCR for expedited clearing for checking, like never really happened. I forget what was the name of the company? There was a local company that was doing this as a service. This is like 10 years ago in my brain, so it was a while ago. But there was a company that was like revolutionary in how they created custom OCR for checks. And they were doing a great job of it. And I don't know. Yeah, this is interesting. I don't even remember them. And what happened to them? But they disappeared. for whatever reason. Yeah.
to the floor. Yeah.
I don't know if a bank acquired them and then it just like never got rolled out or
Right.
what. But I do know as a user of a bank in Canada that we've been defrauded.
Mhm.
And if you look at how it happened, it's incredulous. Like you'll have a check that wasn't even made out to you,
Yep.
somehow deposited in your account,
Yep.
and then withdrawn by a check that wasn't even written by you.
Yep.
And then the bank looks to you for making up the difference if they don't catch the error quick enough.
I have a lot of those nightmare stories I've heard over the years and just experienced myself. But yeah, the TLDR is like, look, at some point we'll probably talk about like AI and where the world is headed with AI. And
How
like,
about right now?
and we're talking about paper checks and like how you have to manually process every single payment, which like behind the scenes, it's a database update, right? Like there's no the whole complexity around it is invented completely by effectively the banks, right? To add value, like seemingly, but it's just so outdated and they haven't changed it. And I think that value add now feels like it slows people down.
Yeah.
Yeah.
So it's interesting because I've thought this for a long time, right? This idea, and I've heard this, so maybe you can illuminate me and the audience
Yeah.
on the idea of rails.
Yeah.
Right. And this idea that there is infrastructure, as far as I understand it, for, communicating, let's say, between financial institutions and authenticating transactions along the way.
Yep.
And that's a rail. So I just had in your seat like a week ago, someone from Interact talking about this whole new rail that they're about to start building.
Okay.
The one rail for Canada. But part of this story is that we need that because the banks can't talk to each other.
Right.
In an autonomous way.
Yeah.
However, the alternate rail seems to be credit. Like if you're running payments through Visa, on Visa,
Yep.
then Visa has its own checks and balances on its platform, right?
Right.
So there's a lot you can do as an innovator working on Visa.
Yep.
So what are the other functionalities of Visa that you guys are looking at exploring?
Well, okay. So there's a lot that you mentioned there. I mean, like, I think maybe just a level set, like,
Yeah.
There's basically every country has their own clearinghouse. That's what it's called, right? Like in the US, it's called ACH, Automated Clearinghouse.
Okay.
In Canada, it's technically called something else, but we call it EFT, right? Like electronic fund transfer, whatever it's called.
Mhm.
So every country has their own internal clearinghouse, which helps move money between banks, like physically move the money between banks. That infrastructure is usually slower, and it's usually like quite old because they were developed like, I don't know, in 90s or 80s, whatever.
Mm-hmm.
So over the years, all this innovation in payments you see is effectively some version of a permutation of hiding that rail because of how bad it is, and basically adding some kind of like new infrastructure on top of it. So for example, the way a Visa credit card works is you swipe this card at the merchant goes to Visa and says, Visa, this guy wants to spend $100. Visa then goes to basically, let's say you issued my card, goes to you to ask, does Ruslan have enough money?
Right.
And then you say yes, for example. And then Visa goes back to the merchant and says, okay, you're authorized to approve this.
Right.
That's what the authorized message means when you swipe the card.
Yep.
It all happens super fast, like
Right.
within a few seconds. But then after Visa has authorized these transactions, obviously both banks are like my bank, which is you, and then the merchant's bank are in agreement that we've settled this transaction.
Yeah.
But then actually 2 days later, when the money actually moves over the clearinghouse
Sure.
rails. So the whole economy runs on this really old rails
Yeah, with a built-in delay.
with a built-in delay. And then what's happened over, I guess, the last, couple decades is that there's all these companies that came up with like a more modern solution to how to move money. Behind the scenes, like you look at China and like you just scan a barcode, right? And it's like the WeChat Pay, whatever you want to call it, Alipay, whatever you want to call it. Still money moves through some kind of like
Intermediary.
local rails that are used for settlements. In the US, it's the same thing. Cash App launched where you can like do peer-to-peer payment by just scanning each other's barcodes. Great, I transfer money from myself to you. Behind the scenes, our banks need to actually move money, right? So in our apps, it might say that I've sent you money and you received it. The banks might not have moved the money yet.
Right. They're just issuing credit on,
Exactly.
each side of it.
So I think like with Interac and all these other providers, they've basically built a alternative version of like approving a payment or approving a transaction.
Yeah.
Which is really fast and real time. Like the way eTransfer sends money is real time, right?
Right.
But then the money actually needs to move a couple of days later. And all the money moves through basically government-run clearing houses in every single country.
Mm-hmm.
And some are bigger than others, like US is obviously massive versus Canada. And then there's only one other thing that exists sort of outside of that, which is the SWIFT network, effectively, which is how you do wire payments.
International interbank.
Exactly, yeah. And even then, those banks effectively just agree to move money between each other. But what they use the SWIFT network for is effectively, it's a messaging protocol. Mm-hmm. It's not even a payment protocol. They just agree that in this format, if I send you a request for money from this customer, then you have to approve it, kind of thing.
You honor this message, and this message is a financial transaction instruction.
And that's why wires also take so long and why they're so manual, why you have to very often like deal with humans in the process. Like if you ever ask, well, why hasn't my money landed?
They have no answer.
You always have to talk to a person because nobody actually knows, because just like it's like a text message, right?
Yeah.
But yeah, nonetheless, I think the point being is that all money moves on this pretty legacy rails, and then there's all these abstractions that have been created over the years to make it seem like they move faster, but actually behind the scenes, it's either one or the other party taking on more risk by telling you have the money before they actually got it, or like holding your funds basically, right, until the money has actually moved. And yeah, there's versions of faster rails, like, Visa, you can call it faster rails, Interac, you can call it faster rails, MasterCard, like all that stuff. Obviously, there's crypto that's coming up now too, which is like a whole other bucket of...
yeah, we won't go there yet.
Yeah, let's not go there yet.
Save that one for the next conversation.
But yeah, that's generally how it works, yeah.
Okay. Okay, but talking about this, like your product being based on Visa, right?
Yeah.
So functionality that affords you, there must be crazy stuff that you can do. And I guess
pretty crazy stuff, yeah.
Yeah. And so I should say it like this. Where is Float seeing opportunity in enabling? Because I think your core customer is still CFO office, right?
Finance team, CFO office, yeah.
So where are you seeing opportunity amongst your customer cohort of like finance teams to provide value that now builds further off of the credit card data?
So credit card data is one thing, right? Which is like, we help you categorize transactions faster. We give you more information about like where you spend the money and what you spend it for.
Right.
We'll let you block categories of spend on a card instantly within the app. We let you pause cards very seamlessly, change limits very seamlessly, all that stuff. All this is possible is because we're directly integrated to the Visa network, right?
Yeah.
Like if you just have an expense management app that doesn't have the card attached to it, you will never be able to control this stuff, right? You just won't. So that's a core innovation, I think, from Float in the first place. But then, there's other things that like didn't exist in Canada before, call it, we launched it, for example, ourselves. Like we pay 4% interest on every single dollar that you deposit into Float, effectively. That like there's a checking account, there's a savings account.
Oh.
And
what?
with the banks, and you have to physically move money to your savings account, and even then you might not get a rate of 4%. But with Float, literally any dollar you deposit doesn't matter. We don't understand why you need the distinction between savings versus checking, for example. You know what I mean? It's all just like sub accounts within your pool of cash. But why can't every dollar you keep in an institution earning interest right away? Because the institution is earning interest on that right away, right? That's a question we're trying to answer. So when we
revenue side, you're starting with the revenue side, or is it more about holding?
Right
capital?
Now, it's more on the spend side.
Okay.
So it's basically your capital on the spend side that you're earning interest on. So if you pre-fund the next month of your spend on Float, for example,
right,
for bill payments or reimbursements or cards, like all that's going to earn interest, right? Very similar to what probably you see with like Wealthsimple, for example, right, where you can get a high interest rate, and they don't care if this is a checking or savings account. They just give you the interest, and similarly, they don't care if you are a 1-month-old customer or if you're a 30-year-old customer for them,
Mhm.
they give you the best rate available. And that's kind of what we tried to do with Float as well. And then same thing recently of like FX services, for example, where we notoriously offer cards in both CAD and USD currencies, so you can spend across the border if you need to. And like we launched FX recently, and the thing we see is, banks charge 3% for FX. And you start asking yourself a question like, why does this happen? Because inherently, if you have cash across the border in both Canada and US, you don't even need to convert that money as long as your markets are balanced across the border, right?
Right.
Not a single Canadian business can get like good interest rates unless you have like incredible relations with the banks. And we end up launching an FX product that is like 0.25% FX rate, which is effectively 10x better than like a 3% rate to the bank or the 2% rate to the bank. So we keep asking ourselves this question of like, why does it work this way? And what's making it happen? And I think very often we just come back to the same answer of like, there's this like pretend or old reason for rails holding people back or banking infrastructure holding people back.
Right.
And if you actually come to it from, first principles point of view and you try to build the better way, you can offer way more competitive services. And like with cards, that's about transaction data, about controlling cards, changing limits, not having to go through a lengthy underwriting process and stuff like that. But then you look at the rest of the banking infrastructure, and it's about how you get your account number, how you get your FX rate, how you get your bank payment and stuff like that.
So super interesting, because I think for some of the reasons that banks, larger banks, especially in Canada, and just to paint the picture for people outside of Canada, I think, how many banks are there? There, in terms of the major banks,
It's like 5 banks.
5 banks.
Yeah.
Then you've got credit unions and smaller kind of like lending institutions and stuff. But 5 banks holding, 30 million accounts.
Yep.
Well, 30 million personal accounts, and then God knows how many, business accounts. It's very interesting. So I would say that because of their size, it's probably that alone is a restriction on their ability to, innovate.
Totally. I mean, it's hard to say that because, in other markets, let's just pick US, right? Like banks are way more innovative in the US. But also in the US, there's like 4,000 banks compared to Canada, there's 5.
Yeah.
So I think the real question that comes to mind is just like, why is there more competition in banking Canada? And like, how much of a regulatory barriers we've put up to frankly protect those players from disruption or from, trying to create new products and new service, and how little incentive they have to innovate, frankly, as a result of that.
So let's talk about that and Float. How restricted are you by red tape to innovate, do you feel like, as a company?
So, Float is not a bank ourselves.
Right.
We have banking partners behind the scenes.
But what determines something being a bank in Canada?
It's effectively like compliance requirements, how you need to be treating your assets, how much liquidity you need to have, and sort of like a lot of regulatory and sort of like compliance, filing requirements and stuff like that. So Float is, licensed with FinTech and all those other things. So we're authorized to move money across Canada and so on and so on. But the thing we frankly don't want to do unless we have to is to become a bank, because the second you become a bank, you have all these requirements around yourself. But I think the best example of this is this is happening right now around, like, again, AI, right? That's
Sure.
a hot topic. But the biggest players in the space and the biggest winners in the space today want the most regulation because they are arguing for protection of customers, right? Vice versa, every time you add regulation, you're going to slow down innovation. And you're going to slow down, younger startups trying to build something new that maybe is around the edges and so on and so on, but deliver value in new ways, right? And I think financial industry, frankly, is like at the furthest end of that. Like, it's already gone through that story.
Right.
And I think the existing players have created this infrastructure for themselves where they protect themselves and protect their businesses by creating all this regulation and putting it in place. So I think Canada is like way more regulated on financial services sector than US is, for example. And that's probably part of the reason why, the number of banks that exist in Canada is so much smaller.
Is it also an opportunity, though, for companies like yours to work with the banks?
In some ways, yeah, for sure. But I think in the US, what you see a lot more of is community banks, much smaller banks that are focused on specific either use case or customer demographic or state or jurisdiction and so on and so on.
Right.
And like a bank is a fine business to run, right? Like it's just not a business.
I like that sentence. Bank is a fine business to run.
It's just not a business. And like, as long as you meet the requirements, you should be able to just
open a bank,
run a business, right?
It's so true. It's a weird thing that it's like a taboo kind of topic in Canada, right? That's when you know it's kind of mafioso a bit.
Totally.
Like, it's strange. You're absolutely right. That it's strange that we kind of like hold there's two industries, I think, in Canada that make up for the bulk of our economy, which seem to be like out of the reach of entrepreneurs, which is, one obviously is like the asset costs and like development costs is like extractive industries, right? Extractive industries makes up for a bulk of our GNP, I would assume.
Yeah.
In the natural resources stuff. Like, it's not lumber, it's diamonds and oil and God knows what else.
Yeah.
And then the other one, of course, is financial services. That's like our number 2 industrial sector, I think, in the country.
There's real estate somewhere there in the mix too, but yeah,
right.
Financial services, telcos, right? Like, you can't touch those businesses. Regulation is really, really strict about it. Yeah, like how do you even go about starting a bank in Canada, right? Like, you're just not going to do it.
So let's talk about the customer kind of like adoption of Float and their kind of like, how do they assess this idea of financial services companies that are not banks, providing them with services they used to procure from banks or still do?
Yeah, like, I think, I think Float is riding this, huge tailwind that like people hate their banks. Like, there's like a genuine personal hate towards banks.
Yeah.
And like, you can't blame people for this because everybody has had a bad experience of their bank, right? Like,
yeah,
either on the personal side or on the business side. Again, like, if I have to go to a branch to send a wire as a small business owner, like, I'm really angry. Like, why do I need to do this in this day and age? Like, I can have like AI write the whole memo for me about like, I don't know, 20-minute research paper about how the whole Canadian banking infrastructure works, for example, but I can't send a wire online, which is crazy.
Right.
So I think, that frustration with the existing experience is definitely there. And I think that very often people are seeking something else. They're like, this messaging worked for us in the early days of like, we are not a bank. Like, people are actually like, I want something that's not a bank to do this job for me, because they just have no faith that the banks will innovate or do it in a good way. And then I think, beyond that, like, when you think about customers who are not on that more aggressive, like, switching side, who are maybe using a bank and they're okay with it, but they don't know what else exists out there that's better.
Right.
When you actually show them that product experience, I don't think they actually care that much about, are you a bank or not, as long as you can prove the security, credibility of you as a brand, as a business. So that's, for example, why we've invested so much into our brand from the earliest days. And I remember, like, my co-founder Rob, like, he's really prioritized that as well from his point of view of like, we were probably too small when we ran our billboards the first time around the city, but like, we just felt like we had to do it to build credibility for our business, because when somebody sees that physical billboard at a bus stop or the intersection or in a gardener, like, they will not think of you as just some scrappy startup that's being run out of the basement. They'll think of you as like a real business, right? And I think creating that recall, creating that credibility with everything we do.
So that was a brand exercise. That was that tied to a particular go-to-market function though, in terms of like sales, like
our marketing team.
Yeah, but like, did you strategically run billboards next to like, the homes and the offices of 100 key accounts?
No, what we've actually done is we've used a bunch of data about like where our customers are located.
Okay.
And where we don't have customers, and we've kind of ran a few tests of like, busy metropolitan areas where we either have a lot of traction already.
Okay.
And it's more of like a recall thing.
Yeah.
Or where we don't have any traction and see sort of like which one does better. If that makes sense.
It's interesting because fundamentally, I mean, for a B2B product aimed at financial services, people who aren't necessarily going to buy in a B2C way, you would assume, the brand recognition is probably the best outcome that you can hope for, right?
For sure. I think there's this whole trend of like, consumerization of enterprise.
Yeah.
Where there's like two things that are really relevant, like your upmarket enterprise experience, bring them down to SMBs is really powerful in a simplified way.
Mm-hmm.
And then at the same time, like, a lot of more people are potentially shopping for products a lot more like consumers versus, sophisticated business that you might imagine the way they would do it. But there's the trends, right? Like they're not necessarily the norm. They're just sort of like, call it tailwinds that support you. And every single year that becomes more and more apparent, and, there's more and more traction and so on and so on. But it's not something that makes or breaks your business. Yeah.
So are there particular industry, segments that you found adoption strong with, or is it like any type of business, when they wake up to it, they wake up to it?
Yeah, so we've really focused on making sure Float isn't just tailored to one industry, because we think Canadian economy is very broad, and we should be able to serve all kinds of business on Float, right? There's obviously more traction of like tech first companies, right? Companies that use technology every single day, who know what the SaaS buying journey look like, and so on and so on. A lot of it comes down to finance team. If they worked at a previous company where they've used software tools in their finance stack and what those tools were.
Mm-hmm.
And like how they can come to a new company, for example, implement the same solutions and stuff like that.
Yeah.
So I think all those things matter. But like ultimately we have customers from all ends of economy at this point. And like it's really interesting. Sometimes you have like, First Nations tribe sign up for your product, for example, or you have a construction company sign up, or you have like a school sign up, and it's the use case you never imagined, right? But they're so fascinating, they're so interesting, and it sort of goes back to where we started, which is like every single business needs to pay a bill, swipe a credit card, and empower their teams to do the job basically day to day. And very often that involves like making payments and sort of transacting, right? So it's part of running your business. And I think that's what makes, Float frankly so exciting, because you can talk to any business and find a way that is relevant, for Float to come to the conversation. Yeah.
Oh, absolutely. So is it a product that's socialized now, or the brand? Like, are you finding that it's selling itself?
I think we definitely have a lot of like recall, specifically in like tech, venture, community. Like I think there's a lot of that we've done there, which has been working quite well. I mean, by far, I don't think we've reached the long tail of Canadian businesses, right? I think that'll probably take quite a bit longer. And I think we also haven't spent a lot of time like really trying to nail the verticalization in our messaging yet. I think it's something that will come to us over time. But yeah, people really like it. And I think, word of mouth is also something that's really powerful. Like the Canadian finance community isn't that big, right? So if you get a few of them to really like your product, then they really tell about that to everybody else they know, sort of in the space and industry.
Yeah, it is. It is small. Yeah. And are there particular like what does community look like amongst CFOs? Because again, we said something about typically, even in an agile company, if you look at like, tools at people's disposal to do their job, there aren't that many, finance tools, or at least finance might not undergo procurement every few months to look at what's cool and hot in their sector that'll make their lives easier. So I guess, how do you hack that like lack of procurement,
Like I think, people aren't shopping for a new bank account or a new credit card every single day. But that's, again, like the way we thought about it, Float, is there's so many different ways to get started with Float.
Yeah.
From cards to, receipt capture alone is a valuable offering, to reimbursements, to bill payments, to the 4% interest accounts we offer, to FX. And the list kind of keeps growing.
Right.
And I think we'll keep launching new products, which is going to keep helping there as well. So the question, like, frankly, the challenge I think we have to solve ourselves, but that we think is going to be really powerful for us long term, is like, which ones of these products do you use to acquire customers and sort of like get in the door with, right? Not all of them can do it. Like, not people aren't always shopping for 4% interest account, right?
Right.
But people are shopping for cards a lot more often. as company goes through certain sort of like growth stages, there's very clear moments where your expense processes break and you have to buy a new solution, and you cannot use Excel sheets anymore for expense reports.
Right.
So being thoughtful and mindful about like where to use what, if that makes sense, and building playbooks and strategies around that, I think that's really the long-term approach we're trying to take to this stuff. But we have so many different reasons why somebody might come to use Float at this point, which is really exciting. It's a good problem to have. It's sometimes overwhelming, but it's a good problem to have.
It's interesting because you see it in various different software segments where it's kind of like that sense of constant opportunity for the user. So once someone gets in and they start using it, it's almost like an experiential brand, right? Like similar to like us. You book a meeting room here. Oh, there's bigger meeting rooms. Okay.
Yeah.
You have like an SKO in a big meeting room, and you're like, this is great. We could rely on you guys for anything we need.
Yeah.
And that's a tough thing to like get people in the door for, but once they're in the door, they become very loyal, and they like the fact they get more value than they assumed that they would get, right?
For sure. Yeah. And like, I think, there's the comparison comes to mind is like Loom, right? Like the video recording tool to like
record
your
someone a
screen
video
and like record a small video of yourself.
Yeah.
Like there's both businesses are valid, right? And both approaches are valid, but there's basically like a single job to be done tool but the job to be done is so relevant and so painful, and you can sign up for it so easily that you can grow like wildfire, right? Which is what happened to them, especially during COVID, where everybody needed that.
Right.
Vice versa, you have this tool that maybe people aren't buying every single day, but you have many of them lined up side by side with each other. And, once you use it, you don't really turn it off very often. So it's the two sort of like, both businesses have their own pros and cons, right? But I think the world of Float is that, accounting in general has very small churn rates, right?
Yeah.
Like as a product category, like cloud accounting and stuff like that. And I think finance tools as a result have very similar patterns where, if you pick up a tool and you start using it, it's a lot less likely that you're gonna just turn it off overnight.
Right.
Yeah.
Nice. Yeah. Well, especially if it's to do with payments and stuff. Like I think
Correct.
Because your whole organization becomes like used to using that tool.
Roll it out to the whole team, train everybody on how to use it. You now onboard all your vendors and merchants on it too. They, like this doesn't get talked about at all. But again, this is the complexity of the finance team. It's managing vendors is like a full-time job.
Oh, for sure. Yeah.
If you're paying, a couple hundred bills every single month to your suppliers or to your vendors to actually manufacture a product or do the thing that you need to do as a business to deliver your services, like managing those 200 vendors and paying them on time all the time is quite complex, and there's a lot of things that could go wrong in the process. So swapping out those tools is also like really hard, and you have to think twice before you do that.
Mm-hmm. Well, that's it. I mean, you get this kind of like vendor lock-in because people trust it and they rely on it. Absolutely. A single solution to just manage all your expenses in an automated fashion. That's so great.
It's very powerful. Like if anything, the one thing we always say like inside of Float is that, we don't want to take that for granted. We don't want to like just ride the wave of sticky products and sort of, we want to make sure people really, really like what they use. And frankly, like that's why we've seen this the whole time before we got into sort of building Float, is that you sign up for this tool, you start using it, and then you realize how terrible it is for Canadian use cases because it doesn't support this, doesn't do the taxes properly, doesn't extract OCR correctly. Tip in Canada is like on the receipt instead of like written by hand, like all that stuff, right? So we really want to make sure that doesn't happen with our products. And that's what we saw as a gap with every single like international solution that sort of like launched their offering in Canada over the years.
What do you have to say to other entrepreneurs building products, maybe looking abroad in terms of considering Canada as a primary market?
It depends really on your product and the category you're playing in. I think it's harder to build in Canada for sure. Everything from infrastructure to support you get as a startup founder, capital, like every aspect of it. I think it's harder. I think insofar that you're talking about like SaaS businesses, it's always better or easier to go to US or go global right away and not constrain yourself to the Canadian sort of market. But I think if you find a big enough TAM in Canada and you have a good reason to localize, not just for fun, but like you have a good reason to localize, you can build a really great business here. And I think people are very willing to buy products that are Canadian, as I mentioned. Given the choice, if your product is competitive, then they will always pick you. There's a lot of loyalty, there's a lot of support, and all those things, which is amazing. Like it's all you wish, I think, as a entrepreneur, as a founder. Like I remember when Griffin and I started Float, we were just so amazed by how great our customers are. We're like, these people are amazing to build for. They are really helpful with feedback. They're really thoughtful. They always want to help. They're proactive, like all those things. But part of it's because nobody else is building for them, right? But yeah, I think in general, it's like, it's harder to build for Canada alone. So I think it's very often like a constraining factor that maybe will slow people down if the better path for their product and their category is to go global right away or go to US right away. But I think, there's a lot of products that we should be building for Canadians because nobody else is building them. And I think you just need to know when to do that and when not to do that, right? Because you don't want to also just put yourself in a bucket and not be able to, realize the full growth potential of your business right away. Right?
Okay. Yeah. With an eye on sustainability and an eye on growth, look for solutions for Canadians if you're in Canada.
Yeah, I think there's probably a handful of industries where localization makes a lot of sense and they're big enough in Canada to build for. Like real estate's another example, right? Where I feel like there's a ton of stuff you can do that is going to be highly localized and will serve Canadian needs specifically. I think, Wealthsimple showed this on the finance side for consumers. But again, if you're building like a B2B SaaS app to track like another sales CRM tool, then like, what's the reason you have to be in Canada?
Right.
I think, if anything, you're doing disservice to the potential your business has by just being in Canada alone, right?
Oh yeah, like if you're building a moose rental software, then
sure,
this is the country for you.
Right.
And then the other side of it is running a company, relying on technology. You're an engineer yourself. What would you say about, Float being based here and talent and building a company for wherever you're focused on as a market, but building a company, software company here in Canada?
Yeah, a few thoughts come to mind. Like, I think, first of all, Float is very lucky to be able to hire people from all these great tech companies that have existed in Canada over the years.
Okay.
Right? Like our people who've joined us have come from places like Shopify, from Wealthsimple, and like all these other big tech companies that either have open offices in Canada or have been Canadian startups for their entire life. So that's been, I think, a great support, and I think it shows to sort of like how far the ecosystem has come in the last 10 years, right? Like the more success Canadian startups or Canadian businesses see, and the more international businesses come to hire in Canada and keep the talent here, the more our ecosystem develops, right? And I think those people then join local startups and they start building here locally as well. A lot of people have joined Float from, big US companies who just want to build for Canadian needs, right? And Canadian businesses.
So out of choice, it's not downsizing or something that they've, left.
No, yeah, they just want to focus on the Canadian mission, right? Instead of working for.
That's huge. I haven't heard that from anyone.
It happens very often, especially I find for the reason like engineering, because I think there's just a ubiquity of opportunities available and startups within every single category that exists in the US. So at some point, my feeling is that people feel like it loses its meaning a little bit. Like everything seems to be disrupting everything and be the most innovative solution in every single category. So at that point, I think people just want to build for Canadian customers.
Right. There's got to be like a purpose to their work.
There's an actual purpose to that. So I think that's really powerful. And then, I think talent in Canada is strong relatively to a lot of other countries. I think it's definitely not the strongest. I think US has way more talent in a bunch of categories. I think on the engineering side specifically, talent in Canada is probably like in the 90th percentile, definitely really, really good.
Globally.
At the global level, yeah. I think in some other functions, it might be a little bit not as competitive, but most of it comes because we just haven't seen as many success cycles of businesses developing and growing in Canada. And we haven't had those people sort of like come out of those schools effectively and like take those learnings to new places, right? That But engineering has been great. And I think, a lot of Canadian schools contribute to that as well, quite a lot. A lot of people who graduate, for example, Waterloo, go to San Francisco, eventually want to come back to Canada,
Right.
for example. So all of those, I think, are great things, and why Canada is actually somewhat competitive on a global landscape. But there's definitely room for improvement. There's definitely a lot of room for improvement, and there's ways to attract talent in Canada, but there's also ways how getting the best talent is really hard in Canada, because the TAM obviously is smaller. The impact you can drive is much more local as well, and so on and so on. So there's pros and cons to it. Yeah.
Right. And have you guys, as an employer, have you found it difficult to compete with Silicon Valley salaries?
Salaries wise, for sure. I think the way US structures their compensation and salaries is just a lot more aggressive than anything compared to Canada. But
Crazy. There's like senior devs being hired. I don't know. I saw some listings just a few weeks ago for like 350, 400 US plus like
yeah,
upside. And then like the company might not be around tomorrow, or
I mean, look, I think that the truth is also the amount of, it all starts with capital, right? Capital goes to startups and founders. Founders end up hiring really, really outsized compensation packages, teams. Is this business going to survive in 5 years from now? Like, you literally have no idea. It's still a startup. It's the same.
especially if they're all mercenaries.
Sure, exactly. So do you get higher pay? Yes. Do you get the same attachment to the mission, the vision of the company, what you're building, what it means for the economy you're building it for, and so on and so on? Like, probably no, right? Like, that's where I think the gap comes from. And then, a lot of people, frankly, just don't want to be in the US. They want to be in Canada, and vice versa. There's people who want to be in the US explicitly. So,
Right.
It's everybody's personal choice. And I think, but there is good talent on both sides of the border. And I think, especially engineering, Canada is doing quite well. I think there's other roles and other functions where Canada could get more competitive about, but it'll probably take time to get there. Yeah.
Okay. And how many years into the journey are you?
So started in 2020, so 5 years now. Yeah.
5 years. Oh my God. Yeah. Started right at the pandemic, eh?
It was wild. Yeah.
So 5 years in compared to when you got going, and it was just kind of like a problem that you needed to solve.
It was like two of us and a few of our contractor friends from university.
How many staff are you now?
We're 150-ish people now. Yeah.
And what's the geo dispersion? Is it mainly here?
Mostly Canada. We have maybe a couple people in the US now. Yeah.
Okay. And across the country?
Across the country. Yeah. Well, I would say like 75 to 80% of the team is probably around GTA specifically.
Okay.
But we do hire in other parts of Canada every now and then. Usually comes down to, we meet somebody who we think is really, really unique talent that we maybe couldn't find directly in Toronto. So we end up hiring remotely for those. Yeah.
And Toronto's a mothership.
Yeah. We have our office just on the street. That's Spadina and Richmond. I've grown it now to a couple floors in the building. We started off with one. 4 months later, we realized it's not enough.
Crazy.
So started expanding to second floor there too.
Nice. Luckily, the economic downturn has allowed you to expand into multiple floors in the same building.
We'll have a separate session talking about commercial real estate.
Yeah, that's a
interesting.
whole series. That's a multi-part series. I could
make a season 2 for that.
Yeah, totally. Awesome, man. Well, it was good chatting.
Yeah.
Are there any things that you want to add in before we wrap?
No, nothing crazy. Thanks for having me. It was really fun.
Pleasure.
Been waiting to do this for a while. Just excited to be part of the community here. All the startups, all the founders, all the people who are building for Canadian businesses or not, but building in Canada.
Oh, totally.
I think all that goes a long way. There's so much. It's hard to articulate this, but whatever happens within this ecosystem now, the results of it in 2-3 years from now, or even in 10 years from now, it's really hard to measure it, but I think it's going to create a lot of good waves for Canada in the future. So, everybody who's in Canada and is starting a business or building a product and hiring a team, training people as part of that on how to build businesses, like all that stuff goes a long way. Like even at Float, we've had a few people who have, moved on, and it's always tough, but like they moved on to start their own companies, and it's so exciting.
Right.
Because it's going to make, Canada long term more competitive, and make all of us live in a better country.